I think it's important to give a little context behind like what we're talking about today. And it's important to understand like what's really happening when you're talking about a trending market, then how we can utilize it with the strategies that we're applying, all revolving around smart money being institutions, central bank, right? And the interbank market. Okay, right. So like, let's say, we have a trending market. And we know this is a trending market because obviously, right? I mean, and this might sound pretty elementary, but it's really important to understand what I'm about to talk about here, right? So when you have a trending market, we know this because there's a series of higher highs and higher lows, right? Just vice versa. If you have a bearish market, like you're going to see three different trends. You're going to see a bullish trend, a bearish trend, and a sideways trend. Ideally, we want to look for one of the two, the bullish or the bearish, or if we see a ranging sideways trend, then we can anticipate a lot of opinions being formed and look for manipulation. So when we look at this first, right, when a lot of retail traders, how they're taught how to look at something like this, and I'm going to go from their perspective, a smart money perspective, and then our perspective, how we take advantage. A lot of retail traders using support and resistance, trend lines. Trend lines is just another, it's a diagonal support resistance, right? So you're basically doing something like this. And you're going to see all these examples, and they're going to be pretty cookie cutter, perfect examples where price is coming and hitting that trend line. And you're going to see resistance now become support, resistance becomes support. And the whole idea here is that when price comes down into this area here, now you have this support level with the trend line and you're looking to buy, right? And you're doing something like that. So when we look at it from a terms of smart money, right? When you see something like this, you wait for a pullback, right? Break a structure. Okay, right. So last candle, right? So what do? You do something like this. You look for a kill zone, 71 to 78, and then you get your candle here because that's going to be the last down candle before the up move. And what do? You throw this on here and you got your little candle here, which was the start of the expansion, falls in the kill zone. And then you do something like this. You've built your confluence in the entry zone and all of that good stuff. And you look to take it up. Here's why that's not the right way to do this. It is in some regard, but you have to take into consideration the whole surrounding environment, right? Because this can be a pretty simple concept right here. You just look for a higher high or a lower low in a trending market. You throw your fibs on there to measure that expansion. You look for the last down candle. You look to see if there's imbalance. You look to see if your targets, and then the trade just doesn't play out. Or you'll see it do something like this. You'll see it wick below this, right? And then go through your banker's candle. So ultimately, like this is what we want to do, but you have to take into consideration everything that is really happening here. So really quickly, a couple things that you need to recognize. One, like you're never going to see cookie cutter examples like this. That's why you might learn stuff like this and you jump into the charts and you never see something like this. And if you do, you just don't really know where to enter and you don't know where to exit. But what we do know is how smart money enters and exits. Like, what do we look for in terms of for our candles? We want to see an area that opinions are being formed. You want to see equal highs, equal lows, but you also have to recognize that there are areas of liquidity underneath these lows here. And you have to recognize that the reason we're looking for these areas here where they're basically like these liquidity pools are just an intersection of orders. You're going to have stop losses. You're going to have buy orders. You're going to have all of these different things that are going to accumulate in order to fill these big orders. And I'm talking massive volume that's coming into the market. They can absorb hundreds of millions of dollars. That's why they're accumulating these areas here so that they can fill their orders. Just as important, if you have a clean setup but you don't have targets, that setup's not going to help you. Because as important it is to find these areas, these liquidity pools for smart money to come in and manipulate, to absorb incoming orders, to give themselves a better price, and a place where they can just fill these massive amounts of orders in general before moving price, they need a place to exit. And that's going to come in the form of a high where, you're going to have buy stops here. You're going to have stop losses here who, people might think this is a resistance level, whatever it might be. Or let's just say, there's equal highs up here. That's going to be where smart money can distribute their profits. So when you look at a trending market here and understanding like what is a trending market, like why do retail traders see patterns like this and they're able to, put a very subjective line here to kind of give you the framework of the direction. It's because on these moves back here, smart money is accumulating their orders. Areas like this where you might have that break retest level, right? They're accumulating orders on these pullbacks, and there might be orders or an area where there's a lot of opinions being formed. A lot of orders are there where they can, drive price down, manipulate this area before going higher. And as price is coming higher, right, they're reaching places when we get a higher high, like a high here, or a high or equal highs up here, where they're aiming for, because they need a place to get out. It's as important as getting in for them as getting out, because think of it, they need to create these areas of manipulation so they can fill these orders. So they need just as big areas to start distributing their profits and being able to get out of those positions. So it's almost like a vice versa situation. But when they accumulate their positions on these pullbacks, and then they can see price going higher and maybe distributing profits here above this previous high, and then they make another high. When they start retracing price down and accumulating more orders, this area is going to be respected, because that's where they just recently accumulated orders, and they're not going to drive price lower than that, unless for whatever reason they're hedging their price and they plan on just shorting it and reversing the market and distributing profits under the previous lows that were taken. But let's just show you real-time example here. Now, keep in mind, like what I just showed you with like trend lines and support and resistance and what smart money's doing. This is a resistance level. And the whole idea here is people are going to look at this in two different ways. One, it's going to be traders up here looking at a double top or resistance level. They'll look left for, further validation that this is a level. You'll also have traders coming in as buyers, right? If, you might have a buy limit above this area with the belief that a price breaks through this resistance, it's going to go higher. Same thing here. Now we have a break retest level. They're looking for this resistance level. Price broke it, and now it becomes a support. And now they're looking to take price higher, right? Break retest level. And if you're looking at this from a term in terms of smart money, exactly what I talked about. You have a new higher high. You have your swing point. You throw your fibs on there. You look for this, your last down candle. And you might even say, okay, we took some lows here. We have some relative equal lows here. Okay, this might just be an FU candle. And either way, right, it's structure. This is a 4-hour structure. Look, now we have a higher high. That's my new expansion right there. My last down candle. This is kind of like what the picture I was painting in the previous one. A lot of traders using smart money strategies will look at this like, okay, we have a higher high. We have a nice down candle that took out some lows here. Engulfing candle, higher high, right? And this is where a lot of traders simply just do this and look to take price higher, because that's what structure is saying, right? But then this happens. Boom, then this. And then runs. And then it ends up running higher. You have to do it with the eyes of smart money first, and then you have to do it with the eyes of retail traders and what they're doing and how they're coming into the market. And also recognizing where smart money came in and the areas that they're going to play, right? So this last down candle here is where orders were accumulated, and it's the same thing. It's the same exact thing as down here. Equal highs, resistance level, price trades through this level, people looking for break retest, right? They're buying, and then look what happens. Price goes deeper into this level, disrespects this resistance completely before coming up. This is where smart money accumulated orders before driving price higher. And then you have to acknowledge another important thing here. You have to realize that this break retest level here, same thing as down here, where resistance, price broke through, and then this is where retail traders are using a break retest level as support. And you can almost always anticipate that price is going to come down. Always think of this. When you're looking at an opportunity, always think that price is going to come to the place that is going to hurt the most people, right? So this is a break retest level. You can almost always assume that this is going to be attacked. These are the areas where they can accumulate more orders, right? By coming into this area here, because there's you can have buy limits in here. Maybe there's sell limits if price breaks through this, with the idea if this support level breaks, then price is going to go deeper. You're going to have people that are buying on this support level, putting their stop losses under here, right? It's an area that a lot of opinions are going to be formed, and a lot of people are going to look for opportunity. So when they push price below these levels here, that's a huge amount of orders that were accumulated that they can drive price into. Keep in mind, they're going to bring price. Price is always going to go where it's going to hurt the most people. And then that's where they can fill orders in respect the previous spot here where they previously accumulated orders, because they're not going to go against their own orders. That's the spot that's going to be respected. This is the spot that's going to be attacked before driving price higher. And you'll see this repeatedly. And then, and only then, will you start having clear entries with the real candles you should be focusing on and the real expansions that you should be throwing your fibs on and start dressing up. Look what was respected. I mean, this is a daily time frame, and we'd probably just have to go to a lower time frame. But right now, you have this swing. Let me go like this just so you can see it clearly. Right now, you have your real swing with an area that you know was smart money who accumulated orders in this area, attacking these lows, respecting their previous orders. So this is going to be the spot where they respect. And now you have your real swing that you should be focused on. And then what they're doing is when they come above these highs or maybe other areas, that's where they're distributing their profits. And then the same thing occurs. Traders are going to come in this area here, using it as support, and then price is going to break into that area. And then it's going to go higher. And you can see it came down into that candle area here before going higher. And then again, right here, you're going to have another break retest level, another double top here, right? People are going to look at like this as the M pattern. Stop losses go above here on the resistance level, right? You're going to have traders that are going to look at these both ways. Then you're going to have trend line traders do stuff like this, or maybe they're doing the whole trend line. That's why they're just so subjective. Which lows are you putting this trend line on? Are you doing wicks? Are you doing the full body candles? Which wicks are you using? Are you using the area that has the most, or are you using the furthest two down, right? Like, am I using this to here? Am I slicing over these two to get those two in there because that's the most touches? Or am I doing this here and trying to get the most body touches? It's just, or maybe I just don't use that low at all and I'm using this low. And now I'm maybe using these two lows here. Those look pretty clean. Or maybe it's the bodies, right? It's just so subjective. There's no precision there for your entries or exits or management. It's just trading zone to zone, and these zones are what's being violated. Just like here, this would be a break retest level here, which was gonna get violated, right? Look what happened in here. Like, same exact thing that happened in these other two spots, right? Break retest level, bunch of relative equal lows developed here. Price slams below that, but respecting this area before going higher. Again, another double top resistance level. Traders selling this, putting buy stops above it, right? And if they're putting buy stops on above these levels, where are they putting stop losses? Usually below obvious wicks, And then what happens? Price trades back into, I'll mark up with the orange, right? So my whole point is too, when you see a trending market, the swing lows that you want to get really involved with, the candles and what you're putting your fibs on that are making the new higher high, are the areas. And again, this is a daily, so we'd be going into lower time frames like we did down here in the wick, but it's just we're trying to get the whole picture here just to kind of show you what I'm talking about, right? So like this area here, that's an FU candle taking out these lows, respecting these areas here, right? Before coming higher, making equal highs, and then price comes down into this candle here, which that candle we probably just start dropping down, right? And look for a candle in a lower time frame. You can see it basically just came to that wick here of that last down candle here. People would look at this, especially with this candle here, that price is respecting this level and going higher. And then all it does is come below these lows here, fills the imbalance and comes into this last down candle, which was taking out this area. Because what's happening below this area? More stop losses, more opinions, right? Keep in mind on these pullbacks, smart money, they're accumulating orders and respecting their previous orders and then looking for places where they can distribute their profits. Distribute their profits. Distribute their profits. So they're coming in here. They're filling their big orders when they're taking levels like this. When they're taking levels like this with these big moves. When they're taking levels like this and then distributing them above the highs. Above the equal highs. Above the equal highs. Right? So just seeing something like this, we know after this was taken, this area is going to be respected. Here's your swing that you want to focus on. Price comes into it and pushes up, makes a high. I'll clear all this so we can just focus on the most recent price action. What do we have happening now? Yeah, price is ranging, opinions being formed, right? Support, whatever it is, depending on the person, depending on the strategy, depending on what their indicators are telling them. They're either buying or selling, right? What area is going to be respected here? Where did smart money accumulate orders? These areas, right? Now we can see what? Equal lows, right? Here's our ranging price action. We have our area that's going to be respected. And then look where price comes into. It pushes down, right? Last down candle before the up move, where orders, where people were buying, people were selling, stop losses, right? This is where orders were accumulated before pushing price up. Then price ranged. We can see price smashed into this low. If the lows are taken, where is going to be the spot that they have to distribute their profits? Where is a big enough area for them to unload? The equal highs. They push down, creating a new FU, and then price comes up and takes the highs, right? So this would be your trading range. Knowing what? That this is probably going to be the area that will be respected. So you can basically look at this all the way up where all the manipulation occurred. I'll just do the dailies just for example's sake. Every single area respected. That example I showed you where they teach you how to trade these trend lines. You got your trend line, this and this. That didn't play out once here. You're never going to see that. Rarely. You're just not going to see stuff like that. That's just, it's craziness. It's not even a matter of like if this thing if everybody knows this, or, is this ever going to change? What's not going to change is smart money is playing with an absurd amount of money. And it's just a matter of they have to manipulate these areas and manipulate positions so they can get in. It's just there's no other way for them to become market participants, which led us to the example that we're talking about today. Retail traders, what are they doing? Trend lines, right? I don't even know which one they're connecting. It doesn't honestly, it doesn't matter, right? For example's sake, right? Support, price breaks through, now it's resistance, retail traders doing all that, song and dance. Same thing here. You have support and you have resistance. And this is where they're coming in. We can look at this area here too, and we can say, okay, we had, some areas accumulated here and then price pushed up higher, right? Maybe taking some of these highs here from a previous session before falling down. But what's another way, if we're looking at smart money and we're talking about retail traders, because you have to think from that perspective first, and you're looking at something like this, and you see price, you have your expansion. Where can they accumulate orders here? Where can they get into the market here? You got to keep in mind where smart money needs to come in and how the majority, the herd, is coming in. So they're trading this level here. And I just want to be completely transparent. This was not an example that played out, and I'll show you one that did. But 9 times out of 10, we're going to see manipulation on this break retest level. So this is what I posted today, that I was looking here. And when we looked at this, I think a lot of people were just basically anticipating this to just kind of flag all the way back. But what happened was price pushed up into this level and then did this. And it started pushing away. And the first thing, even for a lot of the smart money traders, what's the first thing that they think when they see this? What's the first thing that you think of right there? Yeah, it's gone. It's no longer valid. They missed the trade setup, right? When you get expansions like in the market, right? To help you find direction, you're gonna see, because think of what's happening when smart money comes in and they accumulate orders and then they manipulate and there's a lot of volume that comes in. What type of price action is that? Yeah, it's fast, it's aggressive. So we call that impulsive expansions, impulsive moves. That's where you get on the flip side of that, right? You're going to get corrective price action. And just simply put, right, you're going to see impulsive. And then that's why you see like these pullbacks, they're more choppy, they're more consolidation, right? And then you see, some double bottom here, and then you'll see price spike into that and then go aggressive. That's right there is going to help you determine your direction. But when you get these expansions, a lot of people naturally just want to see, right, your swing to your swing, that's your trading range. And they just want to see something simple. They want to throw their fibs on there and they just want to see just a straight, simple flag. And then they just want to see it pull back into their kill zone and just go. You got to think, what would be the catalyst there for that move to even happen? How's all that volume coming in there? What could be the catalyst there? More often than not, like, you want to see it violate, if you got a level like this and price breaks through it, kind of like the other examples, and then pushes in and then goes, that's where you're going to see a flag pattern like that come back to the candle. But you're also going to see stuff like this, kind of how harmonics came to play. Because harmonics, what they're doing is they're measuring the expansion. That's this, the swing low to the swing high. And that's where on a harmonic pattern, you'll get your X to your A. That's how they measure that, right? The first part of a harmonic. That's all it is. The impulsive move, that's how they're measuring it, X to the A. So let's say price did this, and now we broke this level here, right? And now you're going to have your newfound support level. And then you see price start to pull back and you're getting all excited because you think it's going to come to your entry, but then you see price start pushing up and perhaps maybe it pushes a little higher. And then you see it break this high and you're like, okay, break of structure. This is my new swing point. And here's my new candle. It's aligned with structure, right? It made a higher high. And that's where you're going to get clapped. And then you see price push down like this. And now you're saying, okay, this can't be legit now because now we have a higher high here. And now it's breaking this structure and it's breaking low, and you switch over maybe to the flip side. That's retail thinking. You have to recognize what's happening here. Break retest level. There's a lot of money in there. That's the catalyst for smart money to fill their orders before doing something like this. And in terms of a harmonic and how these are painted and their correlation is smart money is because these patterns kind of pick up double tops and double bottoms. So when you get this pattern here, remember, X to the A is the impulsive expansion, the initial move, right? Like this would have been an X to an A, right? Those are the expansions. And then the first pullback down, that's your A to B. That's how that's measured. And then when price starts pushing up off of that level and it comes up here, that's your B to C. So now you have your X, your A, your B, and your B, and your A to C. That's where money is, because what is this? Double top. And this is your break retest level. This is where smart money is going to accumulate positions. This is where smart money is going to distribute their positions. That's where that comes from, an A, B, C correction. And then you have your C, and that pushes down, taking the B. This is your D. Your C to D. And that is how harmony is created in the market, hence harmonic pattern. That's what was happening here. Your expansion is your A, or excuse me, your X to your A to B, and the B is where money is accumulating. The B to C is where most people think it's leaving without them. Your A to C down here, now you have your double bottom. So yeah, you now have a spot here where smart money can accumulate positions and distribute the profits. Liquidity and liquidity. And now you can see your X to your A. Now your A, B, C correction. And if price came up into this area here, taking out the B, coming into this candle, that would have been the C to D, giving you harmony in the market, giving you a harmonic pattern, and you would have looked for this move here, down, targeting the double bottom, right? Now, let me show you one. This was an actual example. This was posted in the group. This here, X to your A, right? That's your expansion right there. And what we were looking for is price to come here. But what do you notice here in this, with this trend line here? Retail break resistance level, right? Support, now resistance. Price broke through this and it was flagging back up. And we would have been looking for your swing high to your swing low. And we were basically looking for price to come up here, right? And do something like this. But a lot of people saw price push off this. And I think it was at night. I think it was the Asian session. A lot of people saw it and they deleted their pendings, right? Right there. If people are looking at this, right, and you get your little flag pattern here, I'll just throw some annotations on the flag, right? But you have to recognize this as a smart money trader with the understanding how retail traders are coming in these areas of liquidity that are building. And then you also have to recognize it in terms of how smart money is going to get in and get out of the market. And you have to recognize that just because you see this, it doesn't mean price is running without you. Because regardless of wicks, retail traders are doing this, right? That's how they're marking up support resistance. Like that's again why support resistance is just so subjective, because you know you're looking at a lot of them are looking at the bodies. Those are perfect bodies as of right now, and some of them won't. They'll completely write off this wick if price starts doing this. They'll completely write those wicks off, and that's support for them. And now they have their little trading range. Right? And a lot of retail traders love these ranges because they're the clean side. The clean side, dirty side. The clean side, just something that's easy to see. It's easy to spot, right? Support, resistance, right? And it's easy to spot. And then you trade it either one of two ways. You either sell this, stops here. You either buy this, stops here. Or price breaks, and then you look for a break retest this way, or price. That's what they tell you. You'll get your markups like that. Look for price to break out of this and then get the retest. If you can just recognize a support break retest level here in a trending market and recognize that there's got to be a catalyst here before the expansion, and that these areas are highly likely to have manipulation occur in these areas, and you see your expansion, and what's one thing that didn't happen here? Yeah, no break of structure. There was no price might have wicked below this, but there was no confirmed break of structure. Price did not exceed this expansion, this X to A. And then we can see this happen. I'll just let it run on this one. So right there, all of those orders taken out. But now you're going to have on the flip side, now you got people that are probably looking at this now, right? Break retest level, right? Now this resistance is no longer, price disrespected it. And now I'm going to look for maybe this, right? They're coming into the market here too. They're coming into the market here too. Only for this to happen, right? Break retest level, boom, that candle right there. How many traders do you think bought on that level? How many traders do you think got really excited here, thinking that this was going to start playing out? They got a winning trade, right? They start getting into profit, and then smart money just said, not today. Not today. I'm going to attack the double bottom, and this is where I'm distributing my profits. And let me just show you, right? And this is just another form of how these harmonics kind of pick up these patterns, right? Your ABC, Remember, your B right there is usually like a break retest level because the A and C are usually picking up like double tops, double bottoms. You just have to be able to recognize certain patterns here. And we can see that this break retest level was completely violated. Price pushed up into the point of interest and then targeted right this level here. And then ultimately came down. I mean, that trade looking at 7.5, 41 pips, and it went a lot further. Came back up and tested an area too. But right, I mean, even when you have this is a new pattern in itself. It's almost the same thing will just happen over and over again, right? Still a break retest level, new FU candle, right? Liquidity above these highs here, right? And that's where you'll see the same thing happen. Price will push up above these highs, break retest level, come into the area. That's where they accumulate, that's where they fill their positions. And those are the areas that they're going to respect. 100%. Sorry for my chicken scratch here, but watch. And this level here, right before it, it's the same exact thing, right? So when you're talking about expansions and you're talking about the catalysts that need to happen prior to, this might just turn into like a double little whammy here, right? Literally the exact same thing happened, just in another form, right? I'll just bring this over. That's why when you guys always see me, I'm sure you've heard me say this before, I love seeing equal highs or equal lows above or below my entry. Here's an example, just carried over a break retest level, equal highs right before a spot where smart money came into the market, and they're going to respect where they came into the market here. This candle here probably enticed a lot of people to come in and start selling this break retest level again, thinking, okay, the first one failed. Now price is back below. It broke structure, made a new lower low, right? This one's going to play. Starts pushing down, nice, engulfing candle here. And then price pushes up, takes out the stops, comes into this area, which is going to be respected, and then runs. And where does it run? Under obvious lows, where retail traders are taught to put their stop losses.